Good morning. Hey, hey. Let's see it. Let's see if the audio is correct. Wow, how now, brown cow. Let's go. Hmm, It's gonna take a few seconds. The delay I have on this stream is extremely long. That's crazy. There's no way you could copy these bad trades. Boom. Hey, hey. Let's see the audio is correct. Wow, how now, brown cow. Let's go. It's gonna take a few seconds. The delay I have on this stream is extremely long. Okay, so great. We're all set. We're all set, and we're gonna get started here in just a second. We're already live. I was gonna say good morning. Good morning. Good morning, everybody. It's Tuesday, May 20th, 2025. Um, welcome. Hi, I'm Grady Powers, and I am Grady on the charts. I hope you guys have had a great evening, a great night, great morning. I hope you had a good breakfast or great golf, great tennis, whatever makes you happy. Um, Also would like to hop right into the charts this morning. I wanted to get loose this morning because we've had a week that has been just up and down and crazy. The interest rates for how the housing interest rates are at 7.04%, and this is the highest that it's been for a long time. And that's putting a lot of pressure on the housing markets. But we want to see whether or not that has any effect on the stock market today. I'm not quite sure. We know that there's some international news. In international news, we have what is that? Australia news. RBA interest rate. Something in Canada. The Canadian interest rate year over year, and then the Japanese balance of trades coming out today, but nothing here in the U.S. So we won't have anything in the U.S. markets until 10 a.m. on Thursday, where we will see existing home sales. Existing home sales at 10 a.m. All right. Oh boy, I'm tell you, I put out a couple of videos the other day, and as I was editing the videos and as I was posting the videos, I was just mortified, horrified, terrified, any kind of fight you could possibly think of. I just had this huge chunk of lunch just sitting in the middle of my teeth. But I made the content. So I made the content, and I guess it is one of those things where, you just have to, you know, you have to bite the bullet. Or it was more like pasta, but you have to bite the bullet and you have to do what you got to do. So let's get to the market. Let's get to the market. This morning I started off with notes. I started off taking notes this morning about the Asian session high, the buy side liquidity being ran, the Monday session lows, and then I was watching where these areas had confluence. Because in my back testing, I noticed that when these areas have certain confluences, it's important to watch those levels to see, where they could possibly go. Um, but for now, we're coming into the open of the market in the next 3 minutes. I have several theses that I am uh flipping back and forth right now. Several theses. All right. The first of these ideas that I have is and we're looking right here at the chart. This is the 15-minute chart. I am watching the consequent encroachment of Friday's Asian session as an area of sensitivity. But then I'm also watching because that level lines up with the low of the London session. I'm watching that area to see whether or not we run that liquidity at the low of the London session and we pop right back up into the gap right above London session high in last night's Asian session. So there's an imbalance there. Now, it could serve as a breakaway gap, meaning that we may not return to it. However, there are relative equal highs all along the London session pre-market high. Here, and here. Very flat. Uh, this is a 15-minute chart. Question: do I think that we're going to return to that level this morning, tomorrow, the next day? I'm thinking about that. Okay. Then the next thesis that I have is that we would run this liquidity, we would drop down into this imbalance, we would hit this gap that was formed just a little bit after the opening Monday morning, here. Trade into this area. We have the highs and the lows of the Asian session from Wednesday, last Wednesday before. We would be dipping back into the consequent encroachment of yesterday's Asian session. And that's where that area resides. All of those areas are all clustered together. So that has my eye running to that area. And then I'm wondering whether or not we drop into this level, hit this level, and then rocket ship higher. Next thesis. The idea is that we would run this low, reject from the area yesterday where we showed a little bit of sensitivity. Just drop down, take these lows out, take these lows out. Hit the consequent encroachment of this area, bounce off the high of this Asian session, yesterday's Asian session, and then rally higher, invert in this gap, and then continue higher, right? Meaning we would bounce off of these levels, pop up, turn right over in the zone, and then continue higher. But we're gonna find that out in the next hour or so, exactly what we're gonna see for the morning session. The only other thing that I was thinking that we could possibly do is we could possibly go from a wider range consolidation to a narrow range consolidation, as we would see prior to any break of a range. Let's dial in. Let's dial in. It's gonna go to a lower time frame. Minimize this. I'm gonna watch the 15-minute chart over here to the left. Right? I'm gonna watch the 15-minute chart over here to the left. There are lines everywhere. Okay. Now, because there's so many lines on the screen, it's gonna really cause conflict and issue. ICT says, hey, look, set your charts up so that you can see what's going on. The high of this candle just ran to the low of these up close candles and had a bit of a rejection here immediately off the open of today's price action. But am I going to participate in the first 15 minutes or the first 15 minutes, first 20 minutes? No, not today. Not today. Whew. Not today. Oh yeah, and the other thing that I was considering was since last Wednesday, last Tuesday of last week, we've been in a range at these highs. We've been in a low of a higher time frame imbalance, and then we've been in this range. But then yesterday, as the market gapped down on the opening of the week, we ran up above that opening of the week, that new week opening gap right there, right? I'm thinking out loud as we're operating here. But we created this gap here because we closed here, we opened here, we ran up above it. Now we're coming back down to it. The low of the London session is inside of this gap here. And now we've come right back above it. So you see where I'm starting to generate these inversion ideas. And the inversion ideas are just, we have liquidity. We have a gap that could be filled. But then just beyond that gap, we have a liquidity that could be run. Now, that's what we see here. So instead of just stopping here, just shy of that liquidity, that higher time frame liquidity, we went ahead and ran it. Now we've turned right over. And this idea yesterday was the zone that I would have anticipated would have sent us lower, right? But I cannot, what's the word? I can't get married to a bias, right? So it's just a trading idea that I'm thinking of, right? Uh, uh, it's a trading idea that I'm thinking of, but at the same time, the trading idea that I'm thinking of is also the trading idea that I have to reconfigure whether or not I'm looking at this through a bullish or a bearish lens. And that's my issue. When we come into areas and we consolidate, my first instinct is not continuation. So that's not my first instinct. Well, is my instinct right or wrong? That's gonna really play out the more I backtest. The more I backtest and the more I address m- my misunderstanding of the difference between this same visual consolidation in a higher time frame bearish situation or a higher time frame bullish situation. They're often going to look similar, but the outcomes are going to be different because of the overall trend, the overall direction that the market is going. Now, of course, a lot of people A lot of people say, yeah, oh, well, of course, buddy. Of course, Grady. That's what we've all been saying. But yes, and I agree with that. However, for newer traders and people who are really, yes, really becoming accustomed with the market and the way the market fluctuates and operates, it's still a mystery as to who, what, when, where, how, and why, right? It's still an extreme mystery. And I just want to, every time I have a every, every time I have, I'm doing multiple things, too many things. Every time I have the a chance or an ability to discuss the misinterpretation, I think those who are having the same misinterpretation that I am are saying, yes, that is the same thing that I have a misinterpretation with. On the 15-minute time frame, there's a small imbalance that we just traded to in the pre-market here, right? We just traded to this in the pre-market. I see that we have relative equal highs here. If I were inclined to go short here, my concern would be whether or not I would be ran out here, ran out here. That's my overall concern. So I talked the other day about FOMO, missing trades that have long ranges that pop off the open. Um, waiting until 10 a.m. for the silver bullet and watching the market just run wild until 10 a.m. and then not knowing what to do after that point. Um, we are going to do like we're working on, right? So back testing is going to also include back testing doing nothing, back testing just doing nothing, right? You saw the market do whatever it's going to do. Every one of the theses that you had developed in your mind all played out in a completely wrong direction, then we're going to have to sit tight. But Grady, I need the money. Yeah. You do. That's why you're sitting tight. Now, if you were a trillionaire and it did not matter whether or not you loaded up 10 contracts or 100, then, then you don't have to wait. Right? If you're a trillionaire and you could just say, well, you know what, I'm gonna give myself $150,000 drawdown today, and I'm gonna go in with one contract at a time to make some money. And no, you probably don't have to wait. You'll still be losing a lot of money, but of course you'll get lucky that one time, and then whatever the case may be. But if you're not a trillionaire and it's not an issue where money is not a concern, then you have to wait. You have to wait, right? Because we're stacking pennies, right? We're stacking pennies. We have to keep that mindset and not get too reckless and too wild with it. Mm, okay. The price right off the open hasn't, it's really kind of sat in this area for just a moment. And then we're still addressing these up close candles on the one. On the it should be the 5 minute chart. I'm glad I looked at that. On the 5 minute chart, the 5 minute chart has opened as it's offered us a wick to the upside and to the bottom of this candle and to the low of the wicks of this candle. And then it's kind of dropped down. Maybe it's a slow open that's going to have much more, vigorous price action after this. Uh, I'm still hands off. I'm still hands off because I'm looking for manipulation. Although I did believe that I did question myself. Oh, excuse me. Hell, there we go again. I did question myself as to whether or not yesterday's move to the upside was our manipulation for the week. Right? It was a manipulation on a high time frame due to the consolidation. I know that we are in the discount of a higher time frame imbalance, and we've just tapped off that level earlier. But I'm not saying that that's either um I'm not saying that's either one. That's either the right option or the wrong option. I'm not saying that at all. I am saying that my reluctance to uh my reluctance to make a solid conviction, to have a solid conviction on any one of these positions means that I see this as a consolidation range where there's a lot of back and forth and overlapping price action. Yesterday, we ran the liquidity below London session in this range. And then at the end of the day, we ran liquidity above the range, creating this as the new range. Right. Because this has been created as the new range, right? Are we in a sweet spot from the high to the low? And I can't, and I'm not denying that I do see that. Is that I want to see how the market plays out. If there's no real big news in the market and it stays quiet, then yeah, we could see the price shift in a direction that would be easy to enter, meaning that it would just be very, I said this yesterday, that it would be very standard looking price action. The standard price action is when we go to liquidity without the volatility of higher time frame drivers. Mm-hmm. 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 9:40 a.m. We've been in the market for 10 minutes. Oh yeah. And then this is probably a thing that's going to be really really cool. This quiet price action, quiet, slow, methodical, a one tick per second sort of price action. Um, that's yeah, that's it's difficult to make a transition to more volatile markets from this price action. It will lull you into a sense of superiority as if you're keeping pace with the market. And then when real news comes out and the market is expanded and the ranges really open up, it's like, why isn't my stop loss working? I'm normally good with a 30-point stop loss, right? With a 30 tick stop loss. And then, you have you have 100-point candle, when the market really begins to move. 3 minutes and 13 seconds left in the 5 minute candle. Candle's pulling back up, watching this level. I'm interested to see where this down candle closes. Mm-hmm. Mm-hmm. Yesterday was a rough day. Did not really do well. Yeah, I opened up with a wider stop loss on the very first trade because I wanted to let it breathe. I did have confidence in that entry, and I let it run all the way to take my stop loss out, and we continued on past that area uh, aggressively. And the odd thing is we are today exactly where we were yesterday when I made that entry. Hmm. And that's why I'm having my consolidation concerns, which means that we could run from internal liquidity to internal liquidity without breaking out of this range until maybe 2 o'clock or today or something, or even the PM session, not the PM session, the and the after the market closes. 1 minute and 29 seconds on this 5 minute candle. Looking at its relationship between where it is now and the close of the prior down close candle on the 5 minute chart. Boom, 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 boom. Ba ba boom, 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 boom. Boom, 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 boom. 34 seconds left in the 5 minute candle. Here we go. It's 9:44 a.m. So what we're going to see is in the next 30 seconds is that the second 15-minute candle of the day is about to no, the first 15-minute candle of the day, the first 15-minute candle of the day is about to close. And we're watching to see where that happens. 10, 9. Practically, that first 15-minute candle was flat. It was bullish, but it was a very narrow range body, long range wicks. Hmm. Excuse me. Excuse me, please. Thank you very much. The first 5 minutes of this candle going to be cool. The next 10 minutes of this candle are going to be the macro. 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 You know, it makes me every time I say that, I think about Macross Plus. I don't know for you old school anime lovers. And I think maybe maybe that's one of the issues I need to deal with. Think of a macro as in a different format, as a series of executed movements, pre-planned executed movements that kind of clean up the volatility of the opening range. Oh boy. Here we go. Here we go. And this has happened prior to the beginning of the macro, which is another one of those things that I started to consider. And the thing that I started to consider is why at 9:45, right? Why at 9:45 sometimes we see the action begin prior to the macro, but then sometimes the macro acts as the manipulation. That's the part that gets me. I always thought of the macro as that movement that, well, yeah, that makes sense. And I am saying exactly what I think I'm saying. Right? That the macro would act as the manipulation leg that would move toward a particular level to set up the move. Huh? What? What? But this macro hasn't even begun. It's only 9:48 a.m. Mm-mm-mm. So we're waiting for that first 10 minutes of the day to, transpire. Now, let me ask a question to all you great NCT enthusiasts. Does anybody see the first presented fair value gap? Hmm. Does anybody see the first presented fair value gap? No, I don't see the first presented fair value gap. What I see is this level that we were talking about and concerned about being traded to. There, bam. That's from yesterday, right? Oh man, we were like, oh yeah, we would drop down to the London session. We hit the Asian session high of that previous range. here. You just ran that, dropped in, touched it. But what are you going to do, Grady, if you have 10 minutes left and the macro hasn't even begun yet? Are you going to front run it like you did yesterday? Get yourself all off sides, not waiting for the market structure to shift, not waiting for there to be any market structure at all? Is that what you're going to do? Or you're going to sit here and you're going to say, look, I'm putting in this work. I'm back testing. I'm doing all this sort of stuff so that I can have a day where I sit here and I say, this is my first thesis, wasn't it? My first thesis is that we would drop down, take this liquidity out, run down here into the wick of this area, right here near the literally two consequent encroachment of this level. Uh-oh. It's one of those days. One of those days. What do you mean, Grady? It's one of those days where you see all of the pieces of your thesis come together and you look at the clock and the clock says 9:50. It doesn't say 10 a.m. It says 9:50. It says this is the part of the macro. It's the beginning of the macro. And you're saying, okay, if this is the beginning of the macro, does that mean I should do something here? Or does it mean that I should not? Does it mean that I should? What does it mean? What does it mean? What should I do? I don't know, because this thing just ran my thesis to the just right to that consequent encroachment of this level. Just touched it. Now we're gonna wait and see because this is the beginning of the new 1 minute into this 5 minute candle. The last 5 minute candle hit consequent encroachment, closed here. This one has opened and it's dropped right down to that consequent encroachment level again. So has price begun to deliver to the downside already? Is it sliding? Are we going to run to some higher time frame sell side liquidity range after taking liquidity yesterday, at the close yesterday? The world may never know. Well, actually, we will know. We'll know in a few minutes. That's actually we will know. We'll know in a few minutes. We're leaving that area. We've rallied back to this imbalance that we had set up as an area of importance yesterday, significant, an area of interest. We just bounced right off of that area and began to rally. In 8 minutes, it's going to be 10 a.m. At 10 a.m., I'm going to say, uh, 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 here we go. Watching the body on the 1 minute as it forms. Does this represent the first presented gap? There was another area that that was contesting this zone. And the only other area that I saw that could contest this zone was this level here as the first presented gap. I know if there are overlapping wicks, but there are no bodies. Well, that's neither. That's not true, is it? I was attempting to say that because we had that level and that level, that we could watch that. If it may be, I can't think of the terminology for it though. So then we had this initial move down with this imbalance. We move up, hit this up close candle. We never break that up close candle. We drop in, we move up higher. We never break that up close candle. Set a wick up into the wicks of this candle. We close lower, boom, 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 move lower. Now we've turned over at the zone. And I'm watching as the wicks of the candles touch the area of this box with the very high level of precision before we move up. On the higher time frame, 15-minute time frame, I don't know why I have 10 of these things. I'm gonna take this to the 15-second time frame. Now, the rate of my trades has slowed tremendously, which is very, very good, which means two things, two opposing things. Number one, that means that I'm going to take less trades. Taking less trades, they say, is better because when you take that one trade, you're going to think about it, measure it, and do everything that you need to do, the entire checklist for fewer trades than you would do for more trades. The more trades that you would take, the less that you would be tempting to be accurate, right? You'd put in less effort to be accurate. Now, 54 and 59 seconds. Hmm. In 15-minute chart, there are very long wicks that we penetrated the high of fair value gap yesterday. The prior wick is at the consequent encroachment, and both of these are Asian levels. And I'm looking at is this. I was just looking at these two Asian levels. Uh, high of this gap of this level, we dropped right down, right. We dropped into it, right. Price descended into this level. The consequent encroachment of this gap that we had marked out. This was the entry level that I was targeting. Without conviction, it's not targeting. It's just a recognition of the possibility. We pulled back from that on the 15-minute chart aggressively. The prior wick drops to the consequent encroachment of the Asian session and this small imbalance that we created. Not both of the consequent encroachments, but the consequent encroachment of the Asian session and the high of this smaller SIBI. I believe it was a SIBI at that point that we drew out in a lower time frame. Then right, then we rallied from this area, taking out liquidity below this zone, like dropping down into this area. The lethargic movement, yeah, my voice is lethargic like the price action. The lethargic movement of the price action is the only other thing that I find to be interesting. Maybe it's only because it's 9:57, it's not 10 a.m., right? And once we get to 10 a.m., maybe we'll see a little more energy injected into the market, and it may or may not do something. Okay, let's go down. Let's go. Let's go. Let's go. So here's this imbalance on the 1 minute time frame. Hmm. 30 seconds. There are 2 minutes and 30 seconds left in this 5 minute candle. I believe the macro ends at 10:10, but at 10 a.m., the candle will be somewhere going somewhere. Let's see how low this candle goes into this region. This is not a candle that I would really like to enter because there are 2 minutes left in the 5 minute candle. And that's too much time left in a 5 minute candle to enter on a 1 minute basis. There's too much time left in a 5 minute candle. In the last 10 seconds, it could go either way. Hmm. Excuse me. However, at this point, it's just too much time left in a 5 minute candle to say, oh, yeah, something, something, something. Mm, 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 mm. Back to consequent encroachment of the Asian session from, I want to say that's Monday's. No, no, that's Friday's Asian session, consequent encroachment. We just went right down below it, down to this level. 8 seconds. I wonder where we'll close. Three, two, one. I'm watching the 1 minute chart. So we closed very low in that range. Last minute of the hour for the first hour of trading today. Coming to the close of the first 30 minutes. here on I am. Yeah, okay, I can't. It's too many letters. I was gonna try to make I am Grady on the charts. Hi, I'm Grady on the charts into like a radio station call sign, but I'm gonna tell you, when I started to think about all of the different letters, I said it's not worth it. It's not worth it. Last minute of the hour. We're coming into the last minute of the hour. We have a down close candle on the hourly chart. In the last 10 seconds, we're going to see where this candle decides to close. Very important. Very, very, very important. Where this candle decides to close, will that indicate a market structure shift? New candles open. This is a new hourly candle. Everything below this is the wick of the prior candle. Here's the opening price, a closing price of the prior down close candle here. We're at consequent encroachment of that Asian session from Friday. And notice my hands are here. My hands are here. I don't really have a lot of conviction about the methodology. And I have to admit that because I think a lot of times the fear that we experience in trading is the idea that we don't have a lot of conviction about our methods because either of their speculative nature or their unproven nature, right? We're guessing or it's something somebody told us, but we've never really tested it and proved it. So, um, there's that. And I know you're saying, hey, you're not sitting here just calling out price, looking at price with us today, are you? No, I intend to take a trade. I do intend to take a trade. I want to see, um, I want to see something that I want to see, and I didn't get to see it, and I didn't like it. I didn't get to see what I wanted to see, and I didn't like it. This particular outcome of all of the outcomes is the one that I didn't want to see because we dropped right back into equilibrium, and at equilibrium, it's um it's going back and forth at equilibrium. And that means what? That means that we could just pop up to any higher time frame PD array. Sorry, wrong. Any uh bearish PD array. We could pop up to any bearish PD array, validate it, and then descend. Or we could drop down to any bullish PD array, validate it, and ascend. So that's why I don't like this. I would rather us have been on the extremities of this range at this time. That would have made me much happier. Then I would say, yep, I think either we're going to break the range and continue higher, or we're going to break the range, continue lower, which is fine, or we're going to reverse at this point because of the way market structure is set up. And then we'll just go ahead and, we'll say, oh, yeah, look, processing prices continuing or reversing. But in the middle, all of those are the exact same outcome, right? There is no real reversal. It's always going. It's a continuation in either direction. Well, Grady, no, right now the market is descending into. No, I said what I said. I said what I said. As wrong as it might sound, look, and be, I said that. You see how this price pops up into this imbalance, this up close candle? Yeah, I would love to see up close candle imbalances like this. I would love to see this always send price higher, but we drop down inside very low. We pop up, we pop up, we pop up, but we're heavy. It looks like we're heavy. So should I zoom out? Should I zoom out on the higher time frame? What should I do? 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 I should wait. I should wait. I should definitely wait. I should definitely, definitely wait. And the thing that I would definitely, definitely wait for was, you know what? That's so funny. She's absolutely right. But that's so funny. That is funny. That's true. That's absolutely funny. I really get that. I get that. That's so crazy. That is so crazy. It's triggering, isn't it? Uh. Mm. Da, 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 da. What should I do? What should I do? So the hour exchanges, right? We exchange hours from 9 to 10 EST. And we sit at that point. I like this. I like when this happens because normally the movement out of these very still price action, these very still ranges where price just modulates very subtly. I like these because when price finally breaks out, it's a beautiful thing to see. The reason I dislike it is because I can never truly, well, let's speak in a more positive tone, guys. Let's get that negativity out of our head. I am studying to be able to discern which way it's going to go in advance. That's what I am curious to see and do. Which way will it go once it leaves these tight consolidations, especially when they occur at the junction of an hour and it's at a beautiful time like 10 a.m. on a Tuesday. I'm saying, hey, which way are you going to go, buddy? Okay, so the first move that we've made is just a slight pump to the upside. That was the first move at 10:05 a.m. Slight pump to the upside. Okay, we had this move up. We already said, oh, we would love to see it if price were to do this part right here and then go to the upside. Drop in, drop in. Oh, that's an improper entry. I don't want that. This is what I want. I want to buy it at this point. Oh, no, no. Everybody stop. Everybody stop. Whoa. Whoa. Did you see that? Did you just see that? Yeah. You took a short at the spot where you thought you were gonna go long. And because you took the short at the spot, it goes into profit, but you see, that subconscious mind is a trip. But the more you work with it, the better it gets. That you know what I'm saying? It's the back test and it's the training. It's the back testing and the training. First, first, as a new trader, the doubt about trading was interfering with my ability to trade. But as I began to back test and I began to rehearse and practice, there's also the reticular activator system beginning to engage to say, this is the proper entry to make, even without me being cognizant and that's not, I made a mistake. I made a mistake. But I do believe that that's similar to what happened at this point. I do believe that that's exactly what happened. That subconsciously, I just really just took the short right there, and I put the buy in, and I'm like, what? Because I hit sell twice. It was like sell, sell, right? So I would be in for two contracts moving to the downside. However, I'm trying to move all of that into the conscious mind, right? Into the conscious action. I want to do it on purpose. I want to say, oh yeah, no, reasonable stop loss, reasonable entry on purpose. We're not playing games here. Whew, whew. Okay, we're not playing games here. But we are very thankful that we had such a forgiving market today because it could have ripped my face off and I would have had nothing in place to protect me from that because I had a sell position and I had a buy position below it. Crazy, crazy. Because even on a short, right? Even if I was shorting, my buy position should have been above it as my stop loss. That's terrible. Terrible, 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 terrible. Oh boy. Okay. All right, let's dial in. Let's dial in. So what we saw was is that price ran up, we broke down into this gap, but we made an impulse to the upside that should have continued to the upside, but then it failed. Why? Why would we not run these highs like we would normally do? Why would we leave the relative equal highs completely untouched? Where do we need to go before we do all of that? And where would we need to go before we did that? We know that the highs of these wicks, we know that the highs of this wick, high of this wick, traded into the lows of these up close candles, right here to the low of this candle precisely. Bam, we hit the body here, we hit this body here, then we drop down out of this range. Then we slid down. We'll take this and pull this forward. The high this week traded up above the close of this candle, and then we drop down. Look, I'll probably miss today's move if this doesn't clean up. If it really doesn't clean up and give me what I need to see, which is, mm, which is what? Which is be patient. Which is be patient. I don't need to see anything right now. I don't need to see it right now. I need to be patient. Relative equal lows. Mm, 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 mm. Oh, 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 oh. Mm, 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 mm. One thing for sure is these lows on the ES and the NASDAQ look the same. We dropped down into a down close candle just in the exact same way on both markets. Of course, the NASDAQ always runs just a little bit further down than the ES. Mm, 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 mm. Its consolidation price action is 40 not 10 10 10 10 10 20 10 10 10 10 10 10 12 is 10 12 yada 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 do da da yada da 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 da. You see this little pop up and almost as if it's popped up into this down close area like a small what do you call that gap that's fair value, like a small fair value gap, and then running right through the middle of it is that consequent encroachment level again. I think that's the part that I really, really like. Let's see what happens when we if we touch that consequent encroachment level. What happens? We go up toward it, we get close to it, do we touch it? Do we touch it? No, no, we don't really touch it. What we do is we touch the consequent encroachment at that level and then that level. Oh. That was really interesting. That was extremely interesting. Did you notice that? I wondered if you saw that. How we ran up and we touched the consequent encroachment of that prior Asian session. and then we moved away from it aggressively. Grady, why didn't you trade that? What are we talking about here? We're still in the equilibrium of this entire range. We could go back and forth across these levels all day and go nowhere. We can go back and forth, up and down, back and forth, up and down, and go nowhere. And I have that feeling because of how slow the price action is moving. There have been some declines, right? We have displaced just a little bit, but for the type of a range that we created yesterday, we really haven't gone anywhere. From yesterday's low at the beginning on Monday to the high at the end of the day, we are roughly about in 55% of that total range. 55% of that total range. Literally the equilibrium, the middle of that range. But we haven't decided to move here or there. And then we touch this level again. At any other day, any other time, if this were at an extremity, then I would say, that's definitely, that would be definitely X, Y, or Z, right? Hey, please like and subscribe. Like the video. I have to film one of those. Sometimes I'll go out and I'll try to clear my head. A lot of people don't know that, when you're trading, sometimes if you are really dialed in, you can develop this tension, right? This energy, this, I don't know what you would call it, but it's just this feeling where, everybody else wants to talk about something else and do something else, and you're in this zone. And so sometimes you just kind of have to get out. You have to stretch your legs. You have to get some fresh air. You have to, run from stray dogs. You have to do something else to, you know, snap you out of it. Um, did we invert this small gap here again? Is that an inversion of that gap? Oh, right. I don't trust this. I don't trust this because I feel like we're going to go back and forth 100 times. Because we're right back at that consequent encroachment level. We're right back down. The levels that we're touching with such precision, we're touching those levels with precision again. Can you see it? Can you see how we're touching this level with such precision again? Somebody remind me of what that means. I've seen some of this stuff in my notes, but I don't think I'm not. Okay, so the ES isn't showing us any sort of you know, we're not I'm not seeing any strength to either side. But what I don't like about this is in retrospect, it's a 150% 2020 in retrospect. Right? You looking at this thing in hindsight, oh yeah, it's easy to see, buddy. You should adjust. You should adjust. Well, like no. When I looked at the chart, we had an opening candle on the ES. I'm watching the ES 1 minute on off the corner of my eye. The 1 minute on the ES candle, the 1 minute opens below. It just opened below that down closed candle before it made its run to the upside. Then also, it did not take out the prior 1 minute up close candle on the ES. You see how this candle closes above this on the NASDAQ? On the ES, it doesn't close below that. Now, the secondary candle on the ES has just moved above that, but the ES has a cluster of contiguous down close candles that have imbalances, have SIBI, right? These no, they have true gaps. Gap, 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 gap on the ES. And we just pushed through all of that. 15 seconds left in the 1 minute candle. Now, price has begun to move. I don't think I don't really want to tempt to see whether or not this is the bottom of the day. Oh, excuse me. This up close candle. We drop into it, fail to break out. Drop down to the low. Hit these down close candles. We move back into this range, drop down to here, wick to here. Then we move up, stop down to here inside of this overall range. But we're stopping here to drop down one more time. Time of day is 10:19. Ah. There's a saying, there's a saying down in Texas, and then maybe they have it around in Tennessee, but there's a saying down in Texas, fool me once, you know, shame on you. Fool me twice. I mean, you maybe can't get fooled again. You know what I'm saying? It's crazy. Crazy. Mhm. What do we think? What do we think? All right, that's a strong movement. Manipulation, right? Is that what we're doing? Are we rallying to the manipulation? Oh, we're going down, we're going down, we're going down. We're going down, we're going down. And then this cute little pop. Oh no, we're going to the upside, right? Because if anybody up here is short, we need to go up here and unseat them before we go. If anybody's in position that's short and we are going down, we would have to unseat them before we go. Let's see if that happens. Or did we unseat the longs with this move to the downside? So yesterday, all these people got long for the breakout down below London. All of the long positions. We drop down here, we stop them out, we move away. They add another long position, stop them out. And now we're moving to the upside. Is that what we're looking for? I'm looking for somebody to hold my hand. Please, somebody hold my hand today. But there's nobody here to hold my hand today. That's great. That's great. Thank you. Thank you very much. Thank you very much. Did you see me look? I literally looked around. I literally looked around like, hey, does anybody want to give me the answer to this? But if I don't have conviction, there's really no need for me to enter into this trade. It would be a waste of money. It would be a waste. I like how I see price alternating candles. I like that. But that seems extremely bullish to me, right? Up, down, up, down, up, down, down, up, down, up, down, up, down, up. What? Consolidation. Hmm. 1024. So what are we thinking about? 1024. So we're thinking 1030, and then we're thinking 11, then we're thinking 11:30, then we're thinking 12. And we're thinking those levels because we're looking at the Looking for higher time frame requirements to be met before price were to be moved. The price is being held in this position for a while, and we're looking for those higher time frame requirements to be met before time is allowed to move. Price is allowed to move from this area. On the 15-minute chart, we just put a nice little wick back into this um, area here. We'll call it area because it appears to be the first presented fair value gap. And it appears to be so because there's this imbalance between this candle's body and this candle's body, where that only that one body passes by, except for the wick here and the wick there. So we took that area and we pulled it forward, and price traded to that level, out of the high of it, to the middle of it, back to the high of it, from the middle of it, down below it. And so it is sensitive. There is a significance to this area. Then this candle drops back into this range, and these two these two zones in conflict keep me out of the market. Those two zones in conflict keep me out of the market. One of those zones has to win. When they're both on the same side of whatever we're doing, then I'll say, yep, that's that. That's it. When both of those areas get on the same side of it. Now, once that happens, I promise you, I'm only going to have a moment to enter. It's not going to be a long time. When and what I mean is when we get north of this level and we're trading down, and both of these levels are on the opposite side of this zone, then I'm saying, okay, yeah, I may very well be bullish because that means that we traded off the consequent encroachment of this area of this candle, mean threshold of the body of the candle, if you want to say it like that. But then we would have pressed higher and we would drop back in, retested this area in concert with that area, and then those two would be working together to send price higher. So now we've dropped right back into this area. If we were to measure from high to low, that's a nice little 70%, 62% retracement back into a gap. Nice little inversion operation. It appears to be a nice little inversion operation. We'll call that, we'll call this forward, and we'll call that inversion operation. And so that's what I'm watching as inversion of this imbalance. Mm-hmm. Wow. Wow. And another issue that happens with uh, consolidation. Another issue that happens with consolidation. There are so many PD arrays in close proximity that yes, it takes a great deal of focus to determine which one there is, which one is the one, right? And again, we're still at equilibrium, and we can go either way, and that's exactly what price is doing. It's taking its time, and for every area that it would possibly want to trade to, it is traded to. Okay, that has my attention. We touched the low of that precisely. Move down. Okay. 10:28. Remember, we were watching for 10:30, 11, and 11:30 for the consolidations to come to a close. Even 12 or 12:30, truly. Some days 12 a.m. is just, 12 a.m. is what we get. 12 a.m. Lunch, the lunch rate is what we get. The range of that candle was nice. Nice. Drops down below that consequent encroachment and then pops it back up. What are you doing to In the lower time frame, we turn over here. Oh, boy. 19 seconds left on the 1 minute candle, and I have been exhausted. It got me. It got me. It wore me out. It wore me out. Grady, you've only been sitting here looking at this chart for an hour. I know my expectation was not met, and my expectation was 30 minutes ago that I was going to see something happen. And it was like, no, sit here and watch me bounce back and forth through all of these levels that you marked out 2 hours ago. Touch them all as many times. Now, Grady, you decide which one is the most significant of these significant levels. You decide. I'm like, hey, 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 make it easy on your boy. Just take it easy. Take it easy on your boy. Make it easy on your boy. Come on, it's me. Don't do me like this. Consequent encroachment of this inversion area. Ooh, that's a huge range. That's a huge range. And yeah, that little wiggle above that level, I'm afraid may be all that I'll see as far as upward movement from this point. But I mean, that's okay. We touched the consequent encroachment of that gap one more time, and we pushed back up to this level. Mm. My concerns about being stopped out, they're still there. They're still there. But that's the remnant, the small imbalance right here on the 1 minute. Just want to see us move above that close and then turn around and trade back to it and then move higher. Small imbalance right here. Just wiggle over and trade back to it and then trade up a little bit. But we are still in consolidation price behaviors. So I'm not expecting any long-term extended continuous price action from this point. We drop back into touch the consequent encroachment of that area one more time. Ordinarily, seeing price come right back into the range like that would not make any sense. Yep, it would not make any sense, but we did. Right. So, and I was just watching this level, and I was watching these levels as, we created this zone. We moved out, we traded back into the low of it. We traded out up to the high of it. We dropped back in, dropped down to the low of that imbalance. Then we began to build out. And as we began to build out, then we had this sort of a movement up. Once we began to close higher, I was watching for these down close candles in the lower time frame to hold price. But just as we described, it was right because the time frame that I was looking for is 10:30. Now, did we move to the upside at 10:30 to break down and move lower? I mean, because I was right on the time, wrong on the direction. I can't go in and chase that. I can't. I can't go chase that. I can't just say, "Yep, let me flip bias. Let me flip bias and jump in." I can't go chase that. I have to sit back and and go to the sidelines and give it a few more minutes. I just have to give it a few more minutes because running me out on this entry is not unusual, right? It's not unusual for me to be right and wrong. That my entry was right here the very first time. This is exactly where my entry was the first time. And we dropped right down below that level. We run off the entries that were at this point, and then we pop back up. Remember, we're at the consequent encroachment of that level. This is not unusual. Do I want to attempt it again? Drop right into this fair, right into this imbalance. Touch that high. Touch the consequent approach on that level one more time. That small imbalance. I have to wait. Grady, but what if it goes without me and expands to the upside vigorously, just like without, right? What if it does? Well, I'll have to say this is that the odds of it doing that are very, very high. The odds of it just breaking, breaking this, um, breaking the structure in that direction are as high, right? So we're seeing it do it right now. At the exact same point that you entered here, it stops you out and then comes right back to the exact same position and right, just it does the exact same thing again. Now you're saying to yourself, how then? How am I going to be able to trust that I could get in? Well, I think you should have a sip of water and think about how narrow this time frame could consolidate before it does make a move. It was extremely convincing. It was extremely convincing. We moved up, but before we move up, we break down, break to the upside. And what? And what? Now, what I'm going to continue to do is I would like to, because now we're at the low end of this imbalance that we've been watching all morning. Here, ding a ding a ding a ding a ding a ding 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 ding. No continuation yet. And I think that this is the part of trading that makes trading much more like a job than you would imagine. Just everybody's waiting on their payday, right? Then you go to work, come back. You go to work, you come back. When I call go to work, it's going to work is when you put on a trade, and that trade you have to manage it, or it comes against you, or you find yourself in a consolidation and you have to just sit and do this part of watching price. 1037. Yeah, 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 yeah. Mm. I'm gonna tell you that there is a season in price action. I call it season. Maybe it's a period during the week, during the month that I don't like. That's when all of the action, all the movement happens in London and in the Asian markets, in the Asian market. It just like it's like wait. I'm here to trade, and all of the movement I was looking for happened last night. Nah, and then they make me nah. Look where we are now, right? Look where we are now. This is where our entry was the first time. It it seized. Oh yes, most people think that we're gonna have an inversion inside of this gap. We don't. We don't invert. It's not inverted immediately. Boom. We run to the high, all the way through. Re-enter. Boom. Here's the high of that level. Boom. We boom. Then we boom. And then even this one, you see this imbalance here? We drop all the way through it. Then we move back up through it. Then we trade back into it. This one as well. And then we've moved higher. Yeah. So it's look, hey, 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 hey. So not chasing price, right? Not chasing price and not throwing entries at this. Did it help me or did it hurt me? Did it help or did it hurt? Did it help or did it hurt? It helped. It helped because There have been plenty of times where I would have gone short here again at this point, but because the market was extremely bearish, price declined at this point. And in trending days, where price trends in one direction continuously for the most of the duration of the day, that has been the hallmark of eating up my equity in my account, doing that very thing, chasing that very thing. So yeah, it's better that I just went to the sidelines and then watched as price did exactly as I had kind of predicted. But one of the best things about today is what we talked about this prime pre-market, relative open. It was species number run to gap Asian session inversion continue higher. That's number one. Run to gap Asian run to gap Asian session continue higher. I don't even know if you can see that. Run to gap Asian session continue higher. It's the very first one on my list. And what do we do? Well, today we opened up. We go to higher time frame. Today we opened up. And then we drop down. Ran. Oh no. That's not it. Is that the one? Relative equal highs, run gap into Asian session 21,520. Run sell side liquidity 2170. Run sell side this sell side liquidity 2170. No, 21,270. 21,270. Where's 21,270? Where's 21,270? 21,270. Oh, down here. This is the 2270. Consolidate through all visible gaps. That also happened. Accumulation, manipulation, distribution. Okay, sure. I should have been more clear about the area when I said run the gap to the Asian session inversion, continue higher. Yep. But this is right. This is basically run down into the Asian session, invert, continue higher. It's not this one because that's number three. It's not this. This is number three. So yeah, this is number one. Run, drop down into this level, turn, and then move back higher. Was I able to get on board with that though? Was I? Was I? Was I able to get on board? I wasn't not. I wasn't not. I wasn't not able. I was able. I was um ooh, that's a good word. That's a good word. It wasn't that I was unable. I was definitely able. There was no hindrance to doing it. It was I was early. Early. Oh, early. I can't tell you how many times I've been early on a trade. I attempt to trade options every once in a while. But when I look at the market and I say, oh, yeah, we're going to break down to the downside, we're going to run, or we're going to move to the upside, we're going to fly. It does tomorrow. It does tomorrow. That's the part that trips me out. And then the weird part about the options market is that moves normally initiate with low volatility in the pre-market. And then the active day volatility is much more expensive and much more active. But, recently all of our daily activity in London session and in the what its session is in New York is um consolidation. So it's like we're not, neither going here or there. Even this move, this little pop up, as we got to the high of the Asian session, that dotted line right there, we just went immediately into another consolidation, which makes me think of the AMD manipulation, accumulation, manipulation, and distribution, right? So through this entire range, we accumulated, then we popped to the upside. Where's the manipulation in here? I couldn't tell you. These small, insignificant movements, I wouldn't assume that those would be manipulation. Not on a 1 minute time frame. On a higher time frame, though, We consolidate through this entire area on the 5 minute chart. Then all of a sudden we pop out in this one direction. And unfortunately, as you go up to the higher and higher time frames, the manipulation that you're expecting is not even manipulation. It literally is the move, right? It's not manipulation. It is the move. Now we're running toward those relative equal highs up above 21, 478.75. We're running toward relative equal highs up above 21, 478.75. Would I want to target that for a short little pop to the upside? When we get there, are we going to stop or are we literally going to continue to the upside? So would I want to exit such a profitable trade if I were able to get involved now, get there and exit, or hold for the push through the highs and then, an attempt to break into the premium of the higher time frame imbalance that we're sitting just below? Those are a lot of excellent questions to ask oneself. However, I think today we're going to close with a small loss, aren't we? I think earlier on we entered the market and we picked up like 5, 10, $15, and then we came back and lost like $300, $400, something like that. We're down $98 on the day. $98. We survived a consolidation. If you survived a cons if you consi if you survived the consolidation today, give yourself a clap. If you were able to sit out a consolidation that gave you so many entry signals back and forth and back and forth and back and forth. You know what? One of the weird things about consolidations, at the end, of course, I can see where the bottom is, right? I can see where the bottom is, but we don't try to catch highs and we don't try to catch tops and bottoms. We don't, right? We this is a determined range between this high and this low. We drop in, what is that, 70, 60, 70%. We run back up, 30% of the total range. We drop down. That's the opposite end, so like 80% of the opposite end range. Come right back up, take this high out, a little smaller amount of liquidity above here. Drop back in. We don't take any liquidity. And then we move to the upside, taking liquidity above this high and this high and this high. And so we finally break out of at least this range of price. But did we skyrocket at that point? Did we take off like a rocket and just run? No, we didn't. We came up here and then we hit a small little area of resistance. There's a small imbalance in the pre-market here to the left. There's 15 minutes, there's 12 minutes left in the hour. And here we are. That's the high of this current hour. All right. So this current hour is extremely flat for 40 minutes. It was flat since it's been flat since 10 a.m. Now it's 10:45, and this is a bit of a longer stream for me. I didn't anticipate to be on today longer than an hour and 30 minutes. I believe that we were going to see our entry. Had we found our entry, I would have entered and then um took some sort of a base hit, right? Took some sort of a you know reasonable entry, and I mean no reasonable exit, some low hanging fruit, but I did not get the entry that I wanted, and I didn't have to pay a lot for it. So I'm thankful for that. Thankful for that. Had one errant trade that was just crazy that was also inside of this range. So that trade that I thought, oh yeah, 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 yeah. Oh, oh. Today is the May 20th, May 20th, May 20th. What is interesting about May 20th, right? Well, one of the things is right now we're in the June contract. So the next month is June, which means that we're going to switch contracts pretty soon within the next month or so. So around June 20th, a month from now, we should be looking at other contracts. They expire in June, I believe, right? So we're coming up on the expiration of the contract of the June contract, 2025. and then we'll be switching over to the next one, which is always interesting. Some of these contracts, they do trade a little bit. Some of these contracts have characteristics about the nature and the range of their trading that isn't really conducive to a lot of traders. If you have a lot of experience with different types of contracts, and this is something that I'm saying because every time we switch to the next contract, I have a completely different trading experience. Uh, Profitability, yay or nay. But this one we can definitely say with the ranges, with the tariffs, it's just the next contract couldn't possibly be this crazy. I'm sorry, I'm not want to jinx it. I don't want to jinx it. I don't want to jinx it. I hope that the next contract is I don't even know what to say now. But yeah, there we go. We have 1 hour 27. We've been on the screen for an hour and 27 minutes. And I just hit the space bar and I just left the shift the space bar. Let's go back. Shift space bar. Let's go back. Oh boy. Oh. And this is what they tell you to do. Okay? For those of you guys who've never done it before, you'll say to yourself, wait, what did they say? And I'd say, well, no, what they're telling you is that when you're a new trader and you don't see your setup and it's not A plus setup, sit in your hands and don't do anything. But how do you make money? And then I'll look at you and I'll say, we're not trying to make money. We're trying not to lose money, but in a very gentle and nurturing tone. We're not trying to make money. We're trying not to lose money in a very caring and nurturing tone. Because people who know how to make money, that's not a problem, right? These people making money, it's not a problem. They're not trying to guess whether or not they're able to make money in the markets. We all know that it's possible. That's the word. That's the reason we're here. Making money, as they say, is easy. Keeping money is hard. Keeping money hard. 8 a.m. 8 a.m. Well, making money is easy. Keeping it is hard. Wow, I didn't realize that. That's interesting. How would you guys feel if I took a short right here? What do you think about this as a short off the consequent encroachment of a volume imbalance in the higher time frame? Nah, 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 not yet. I would rather see those relative equal highs run, and I would rather take a trade up there after we run the relative equal highs. I would like to take a trade because it's just a. Oh, oh. Oh, sorry. I am sorry. I am so sorry. I am so sorry. It's just that there's this, right? So you have the Asian session. We have this long, unbroken block of down closed candles at this point. And we have what I would consider to be a SIBI. Most of this has been traded to, except for the areas above. I'll use this one. Let's give it a little more leeway and to all of this range up here. This was the buy side liquidity that we ran yesterday during the lunch rate. and during the Asian session, then we drop down from that area. I would anticipate that this could be possibly a breakaway gap. However, we could retrade to anywhere, anywhere near here because this is still a 15-minute chart, which means that there are lower time frame imbalances that we would need to address. Then we have this imbalance here. Pull this forward. I'm changing the color because I don't think it's an inversion fair value gap as much as I am saying that I just wanted it to be clearly seen that this could be an area that we could reach for on the higher time frame, and that all of this consolidation is because we are looking for an opportunity to run out these two highs to take all the liquidity created up here and around in here, which means that we could come up and very, very close and then leave this liquidity for later on, 15-minute chart. And then once we hit these levels, any of these levels, then we could use that to move down into this range, possibly to about 21.9, 21.289, 21.270, possibly into this area, into this range. I'm watching this low, this high, lower low, right? That could possibly serve. Low, high, lower low could possibly serve. Low, high, lower low could possibly serve, right? And if they could, then we would drop down, remaining inside of the range, hit this level, hit this level, hit this level, and then move higher. Then once we move higher, we would move up above this level, trade back down into the level, and then run to newer highs. Why would I come up with all of that? Because for some reason we've been in this range, right? We've been in this range. Let's see, how would I do this? I think this is what I'm looking for. Because for some reason we've been in this range, right, for a while now. Does anybody know how can I nope, definitely not it. It's like Photoshop. How can I make that smaller? How can I make this smaller? It is what it is. Right. It is what it is. Okay. I think that's gonna be it for today. And I think that if I sit here and I wait long enough, I talk myself into anything. But because of the way price is moving back and forth right now, there are one or two things are gonna happen. What's definitely gonna happen is I'm gonna save some money if I don't blow it. That's the first thing. The second thing is price could run higher or break down in the next 10 seconds. Always possible, right? 11 a.m. is just around the corner. Sticking around for it probably would not help as much as I would anticipate that it would help, right? So sticking around for that probably would not help. On the 5-minute chart, I noticed that we did turn over and drop right back into this imbalance. So we'll take a look at that before we go. We just turned over, we dropped right back into this imbalance. This is that same area that we were watching. We were right here at the consequent encroachment level. We dropped right down in, popped up, and hello, my honey. Hello, my darling. Hello, my ragtime gal. Um, yeah, I drew out a volume imbalance on one of the higher time frame charts, and I see a reaction at these levels, and I said, "Oh, should I get short at this area?" A second ago, but um, a decent punishment for me at this point is not having labeled that imbalance and not knowing exactly what I'm looking at, because it doesn't matter if I have to go over there and find out and figure out what it is. If I were looking for an entry right now and I had to do all of that, I would miss the trade anyway because I didn't label it the first time that I put the level on the chart. Yeah, it really is. It really is getting to me right now. And I don't mean it in a negative way. I mean, when I say in that regard, when I say, "Oh yeah, it's getting to me right now," it's I'm I'm dialing it in. I'm really dialing it in because when things get on your nerves to a certain degree and you say, "Oh yeah, this is unacceptable," right? It's not like unacceptable like other people might think it's unacceptable if I blah 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 blah. Blah. But if it's truly unacceptable to you, it's like this. If there's trash on the ground, right? If there's trash on the ground in your yard. Oh, no, 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 no. Not in your yard. You know that little piece of grass on the opposite side of the sidewalk, right? It's not in your yard, but it's like the sidewalk, and then there's grass, and then there's a street, and there's trash on that part of your yard, right? And because you go to the HOA and they'll be like, no, we own blah blah blah. Okay, 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 okay. Not that, not that. That's good. That's very, very good. Let me see if I can show that. It's LS3 main. Yeah, this is it. Perfect. This is what I was referring to. You see how the price just ran up to this area? 15-minute chart. And I don't know what I marked out, but I marked it out as a volume imbalance. We traded in the premium of that volume imbalance for quite a while, right? Through this area. We traded here in the premium of the volume imbalance for a while. This is the area that I wanted to see taken out. But once we dropped down below this level, we tested this area, dropped in, then we tested it just now, and then we dropped lower. And I was asking, should I short here at this area? But I still don't want to short here at this area because say it again, because we're holding this range, right? We're just holding this range, and we have all of this up here that all we needed to do is manipulate to here, take out these relative equal highs, market structure shift, and then begin to decline. And that's what I am waiting for. Did I get it today? No, if I don't get it today, tomorrow we'll have a different opportunity and we'll have a different look at the market. And if we have a different I'm Mark from Orc. But um if we have a different look at the market tomorrow, it might be something just easier, right? We only dropped like $98 today out of our off of our combine, and then we put the brakes on it. So um yeah. So if we have something that's easier, that's actually more directional, that pops off early in the morning, that utilizes the first presented gap, um, with the more immediate sense, right? Immediate and urgent sense, and some urgency to use that first presented fair value gap, then yes, I think that tomorrow we'll do better. Because we could just fumble our way into profitability, right? And I do mean fumble because I don't think that it would be some sort of precision. I don't think it's going to be a precision entry, you know. So if you're struggling with that perfectionism, then yeah, you're looking for some type of precision entry. And if you're not getting precision entries, then you're failing. Um, right. So we're not looking for that. We're not looking for that. We're not. We're not. We're not. We're not. Stop it. Stop it. So yeah. So bam, right there to the low of that imbalance. Once again here to the low of the imbalance. There, touch the ones here. We touch the ones here. We were using this level as support all through here. We've broken down to that level here. Now that's like resistance. But Grady, are you saying go short here? Nope. I'm saying that this level, I believe, has a much better ROI than trading from here to here. I think so. I think even trading from here to here, we would see a lot more of this sort of a back and forth even to get here. But from here, in order to break down below this level, it would be more of a straight shot. If that's the case. If that's the case. Now, what if we were bullish, right? What if we're bullish? If we're bullish, then it really racks my brain. I really am racking my brain to figure out why. Really racking my brain to figure out why something so bullish, so close to just moving up above and continuing higher. What are we doing? What are we doing here? What are we doing here? Right? What are we doing? What's this? Like what? Like what are we doing? Yeah, we have all of this down here. But I wouldn't want to see us, well, if we're bullish, I think I would, right? If we're bullish, sorry. If we're bullish, I think I would want to see, if we're bullish, I think I would want to see us break down here first. Manipulation, distribution, right? I think that would be the play. Manipulation and then distribution. If I'm bearish, I want to see manipulation and then distribution. And then distribution. One. Okay, yeah. All right. I think that's it for today. I think that's it for today. I think surviving this consolidation was good. I think that was really, really good. Woo! Yay. Search emotes. No, 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 no. I don't want to search. Survive. I'm just typing this into the chat. Survived a con saw. I don't care. I don't care if it's I don't care if it's misspelled. I don't care if it's misspelled. Because type and spell this word so often, and I don't even check the spelling anymore. I don't even care if it's spelled correctly. The thing that I'm more concerned about is whether or not if I place a trade, am I going to get chopped up in a consolidation? That's my main concern. And I said, well, what about intelligence? And they're like, yeah, 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 yeah. Yeah, I'm working my skill set. When I'm profitable, when I'm profitable, and I hope this is an example for all of you too. When you're profitable, get your education. And I know you studied Hamlet at Cambridge. I get that. You're already yeah, and everybody is still having the same experience with trading, whether they studied Hamlet or at Cambridge or uh, they studied Homeboy at high school. That's a strange thing to say. I learned how to be a home. I learned how to be a homie at high school. I'm sorry. I'm sorry. I'm sorry. I'm sorry. I learned how to be cool in high school. You dared what? I learned how to rap at high school. Oh my goodness. Oh goodness. Ha 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 pow ha boom boom pow ha boom pow. We're right where we began. And that's going to be it for me. Guys, I'm going to hit you with this disclosure. And I want you guys to understand that, the hypothetical and simulated, it's on the screen. You can see it. But I also want you guys to know that you got to be very, very careful while you're trading. Yeah. You take responsibilities for your own trading account profile, right? Make sure that you are using sound and efficient um, risk management. Okay. Nobody's responsible for your trading but you. Right? They don't get to spend the money, you do. Which is funny because if you have a family, they also get to spend the money. But that's neither here. That's not it. That's not it. It's neither here nor there. Okay. Hey, like and subscribe. Join us again here tomorrow for more live trading here on I don't know why I would say on I'm Grady on the charts because I am Grady on the charts. I am Grady on the charts. Right? And you can be Grady on the charts too. Right? Do the work. Back test. Nothing you can't get something for nothing. You gotta have something. All right. We'll see you tomorrow. Like and subscribe. Hit the like button. Bye bye. Wait. We got to do this right. Like and subscribe. Dang it. We got to do this right. We got to do this. All right. Hey, thank you for joining us again. I'm Grady on the charts. You can be Grady on the charts too. Put the work in. Like and subscribe right there down below. Bye bye.